In our value segment, we're going to be talking to us about the QSR side. What's happening there, and burgers, pizzas, what are we looking at today?
Burgers, more burgers than pizzas, and this is, the two giants that we have. Globally, we had McDonald's and Burger King until Burger King came into India very recently, and now Burger King and McDonald's are pretty much neck and neck when it comes to performance. If you look at the fourth quarter performance, the absolute numbers, if you compare Westlife Food to Restaurant Brands India performance, that's Burger King India, Westlife Food obviously is, running McDonald's only in the south and the west part of the country, so it's nearly half the country, and this is the entire country. So to that extent, it's not really an apples-to-apples comparison, or rather burgers-to-burgers comparison, but what you can see is that from a listed company standpoint, these are the reported numbers that we have for the India business. Nearly 500 crores per quarter for Burger King India, 600 crores for Westlife Food. Similar EBITDA, margins are a lot better for Restaurant Brands in the fourth quarter. And if you look at the internals as well, Burger King India across the country have crossed 500 restaurants, 513 to be precise by the end of this year, with same-store sales growth of 5.1%. The same for Westlife Food in the south and western part of the countries. They have 438 outlets, 0.7% is the same-store sales growth. FY25, the revenues for Restaurant Brands actually crossed that of Westlife Food. 2,500 crores is what they posted, as again 2,492 for Westlife, with slightly lesser margins, but margins for Burger King are improving. The question is, where do they go from here? For Westlife, we do have, a Vision 2027 that the management has given, 4,000 to 4,500 crores in terms of revenue, with 18 to 20% margins, high single-digit same-store sales growth, 580 to 630 restaurants, and they will add 40 to 45 stores annually. On their part, what has Restaurant Brands said? Burger King India says they will open 60 to 80 new restaurants annually. So that's nearly 50 to 100% more than what McDonald's plans to open. They target 800 restaurants by FY29, and they will see nearly a half to 0.7% increase in gross margins annually over the next 4 years, implying a 200 to 250 basis points improvement in their margins over the next 4 years as well. The question, how much is it for? So for all of this, you look at the valuations. McDonald's currently has a market cap of 11,000 crores. Restaurant Brands, after the up move that we've seen today, is 5,000 crores. So McDonald's currently trading at a big premium. Westlife has a 16 times FY27 EV to EBITDA multiple, whereas that of Restaurant Brands is around 12 times itself. So on a valuation parameter, analysts are preferring Restaurant Brands if the growth is the same, margins are better, and same-store sales growth is higher with better prospects of restaurant addition. But for all of this, the key risk is slower than expected growth pickup. It could be on virtue of competition. It could be on virtue of competition from other players or online players. It could be a lower than expected store additions, or lower than expected growth in existing stores, by virtue of which there would be lower than expected margins. So slower than expected growth pickup is the biggest risk for all these players. But as things stand right now, it's Burger King over McDonald's when it comes to financials and valuations.
Absolutely. Burger King over, McDonald's, Westlife development is what we're talking about. But let's talk about